Just getting the color just right. We're good. Okay, good evening. Welcome to the Sherborn Board of Selectmen meeting of October 10th, 2013. We actually have a pretty exciting evening ahead of us because we're talking about spending your money. So if David could read us the agenda here, please, that would be great.
Is the public concerned about this?
We're looking at, starting with public comment, and then at 6:20, finalize FY13 numbers with Ruth Hohenshaw, the town accountant, and look at an FY14 update with the town accountant, and then town financial story with Mr. Caruso and myself, and then preparation for meeting with the advisory board, a discussion over that, and that meeting scheduled for Wednesday, October 16th, and then consideration of a consent agenda, which at this time I don't have anything on. And then breaking into executive session for non-union contract negotiations.
There is a warrant that needs to be approved.
Yes.
Oh, there is a warrant. Yeah, that's right. I'm sorry. There is a warrant.
Okay, that's great. Do we have any amendments to the agenda, gentlemen?
No.
I'll take a motion to approve the agenda as read.
Well, I'd move that Mr. Caruso become Peter Caruso.
Thank
Mr.
you.
Caruso seems very,
No?
I appreciate that. You can call me anything you want, actually. I'm
How
happy
about
with
Mr.
that.
Peter?
Yeah, just call me Peter, that's fine. All right, so we're moved and seconded.
Second.
All those in favor? All right, great. Off we go. So this puts us into our public comment section. And we have some folks in the audience. Yes, indeed. Could you come up to the microphone and table? Because I'm sure what you have to say is very
Right here?
interesting. Yep,
This one here?
yep.
Are you the one?
Either one is great.
Okay, I'll come here. And so I'll introduce myself and then just, okay, it's a brief comment.
It's fine.
My name is Leslie Barnett, and I live at 40 Whitney Street in Sherborn, and I am here on behalf of the Sherborn Business Association. And I would like to inform the Selectmen and the Sherborn community that we are seeking proposals from organizations in Sherborn that may need funding for projects that will benefit the town or citizens of Sherborn. Due to the success of the Brewfest in May, the Business Association has approximately $7,500 that they would like to award. The applications are due on November 1st of this year, and the applications can be found at the Sherborn Business Association website, which is www.sherburnbusiness.org. And if anyone has any questions, they're welcome to contact me. I'm listed in the phone book. And we look forward to getting applications from any organizations that might need some funding. Thank you very much.
Thanks, Leslie. That's great. And we have the I'm sorry?
I was just saying, including ourselves.
Including ourselves, yes.
And
We have the crosswalk light that just recently was put up, thanks to grants from the
Sherborn.
Sherborn Business Association to the town. That was great. I think you did some other grants that you gave last year. I don't remember what they were.
One
Maybe
was
you-
to Pine Hill, and yeah, I'm not sure of the other ones.
Okay.
Jim might know some other.
No, that's fine. But in any event, it's terrific that you're giving back to the community. So thank you. Appreciate that.
Thank you for your time, and I don't know if you need the press release copy to keep in the file. I brought an extra press release
Yeah,
if
sure,
you'd like
Diane.
that, and I'd be happy to bring it over.
That'd be great.
Okay, thank you very
Thanks, Lauren.
much.
All right.
Mr. Chairman?
Yes,
What was
indeed.
the cost of that crosswalk light?
Off the top of my head, it was close to $9,000 or $10,000.
About
And the
10,
grant
okay.
provided
Okay.
was some other portion.
Thank you.
Is there any more public comment from the crowd here? Great. Well, why don't we, while we're waiting for Ruth, go into the warrant. This is principally a small payroll warrant, as I understand it, and it does reflect, you move, okay. This does include the, reflects the terms of the memorandum of understanding with the police union contract, and we have some back pay that we're catching up with as well.
Right.
Correct, so we have the new rates of pay and some back pay.
Right, it's the retro pay going back to July 1st.
July 1st, the effective date of the-
2013.
Yep.
But their first check under the new bi-weekly system will be next week, so that'll be the first week that they'll
Okay.
get it under the new rates for a full week of pay.
And Paul has moved on this, do I hear a second?
Sure, second.
So all in favor?
just under discussion, I had asked why we were doing the retro when we hadn't signed the formal agreement. And why don't you repeat the answer for the record?
Well, the memorandum of understanding that you signed with the union and then you voted on in executive session is a legally binding agreement that you're obligated to carry out. So those terms are updating the actual old contract and then bringing that in, which will be signed in an open session at a future date.
So there will be an integrated document that goes forward till
3 years,
2016.
yes.
That will come before the board. But we're funding it now based on the
MOU. Great,
Thank you.
that's great. Any other thoughts on that? You good?
No, I think, I think every time you read the warrant, it reveals things that we ought to be thinking about in terms of ways to save costs. And David and I talked about a contract that probably we ought to think about bidding out, and maybe it's a good practice to bid out most of our contracts annually so we can be sure we're getting the best prices.
Perfect, and that's a great segue to what's going to go up on the screen in a little bit, so we'll keep that in mind. It's a perfect way to be thinking. While we're on the topic of consideration of consent, we do have next meeting listed there, and we got a couple of minutes till Ruth shows. So the question is, at the end of tonight's meeting, we do have a couple of folks, the leadership of advisory here to pay attention to to listen into what we have to say. Maybe you'll add some value at some point. But we are currently scheduled and have posted for a meeting with your meeting next Wednesday. We may, at the end of tonight's meeting, decide that perhaps only a few representatives, myself, David, and Ruth, need be there, depending on where we get to. So we'll see where that comes, because we're going to be over at the police, your meeting's over at the police station, there's no cameras rolling, and a lot of the content of camera-type conversations hopefully may take place this evening from our perspective. Okay, so we'll see where that gets to. If in fact we decide we can serve all the purposes we need to serve at your meeting with a representative or two rather than the full board, then we will then think, and we'll go back to this when we get to the end, discussing having a meeting on Thursday the 17th, where we would do the normal Board of Selectmen minutes, and we have a whole meeting, and we have a whole bunch of stuff on our docket to deal with the regular business. So it would be not with you, so the Wednesday night meeting,
Our goal is.
one or more of us will come to your meeting.
Yeah, but our goal is a joint vote on.
Yeah, and we'll see where we'll have a discussion of preparation, we have on the agenda discussion preparation for that meeting, and that, at the end of that discussion, we'll see where we're at. Okay?
The police room holds how many people?
It's a good-sized room.
About 45.
Well, so it'll accommodate members of the public who want to come and see it.
Absolutely.
Yeah, okay.
I've scheduled that on my diary.
Yeah.
And
Okay.
this is the first I'm hearing that it might
Yeah,
be changed, but I would like to go to your meeting.
Yes,
Yeah,
we-
likewise.
it would be-
Oh, you would? Okay, then
Yeah, we
I was
would
just
be
trying to
delighted to
accommodate
have
these guys.
all
I'm planning to
No,
go.
I'm planning to go.
The
Did
more
you
the
have, you
merrier.
have,
This is my way to get out of going to the
zoning.
zoning board, yeah.
Oh, really?
We have a full board now without me, so
Oh,
we're all
okay.
In
set.
fact, you took our room.
Yeah.
All right. Well, then, never mind.
Well, why
That's
don't we
why
put
we're at
the
the
Board of
police
Appeals
station.
on?
Right, understood. Well, I think Board of Health is here,
Here, but there.
yeah.
Board of Health is here
I
on
mean,
the
that's
TV.
fine. We don't have-
CBA's there.
Yeah, we don't
Police
have a
station.
problem with being at the police station, but we
Okay.
would really love to have all three of you there.
Okay, so I think we've decided that's where we're going, so never mind
Okay?
where our discussion gets to. Just trying to accommodate.
Well, even if we
Schedules.
get someplace, it'd be an honor and a privilege to go, particularly when I put it on my calendar weeks ago.
It's in his mind, so we'll definitely have to prepare tonight for that meeting.
We have been counting on you coming, so.
Right, right. All right, so we have a couple of minutes to go, I guess, before Ruth was scheduled.
Peter. Sorry.
Go ahead.
Do you want to talk about the meeting the next night?
I don't think there's any
There will not be one on the 17th.
plan for a meeting the next night, and we'll have to
Okay.
deal with the large warrant on a desk
On-
signing.
It'll be the 24th would be the next.
Yeah, does that work for you?
Yeah, but why can't we sign it
It
on
wouldn't be
Wednesday?
ready on the Wednesday,
Okay.
or some portions of it won't be ready, right? The
Right.
payroll portion would not be ready.
Right.
I think we should continue to work to get that payroll, so we don't have the tail wagging the dog. This is
Yes, I agree.
frustrating every time we talk about it.
This
Yes,
close.
it is.
Yeah,
Yes, it is. Yes, it is. All right.
24th.
Advisory, do you have anything to say while we're on the topic of finalizing fiscal 13 with the town accountant who's on her way?
Not really.
Not really. Okay. Any other words of wisdom before we get to the preparation discussion?
We just hope that everyone keeps in mind the fiscal constraints of the town's resources and holds that in their thought while we're talking about guidance for
Great.
FY '15.
Great, great.
Held the line, things are possibly slowly turning around,
Yeah.
but not a lot of new growth, not, the tax rate is up over $20. I think that's a bit of a psychological barrier. And so we'd like to keep things
Good.
under control and,
All right. Well,
At some point tonight or on the 16th, I'm going to move my usual annual motion that the Board of Selectmen is not going to be supporting an override or looking for an override.
and that's what we're hoping to present a united front. Assuming that advisory
also is of that mindset.
agrees with the motion that.
And we
certainly
previously had a
be-
brief discussion on that. I think there were
Right.
some subject twos type of thing, and we'll have further discussion on that this evening in preparation for meeting with you guys. Okay. So that being said, I see Ruth, our favorite town accountant, is here and ready to take the hot seat up here with the microphone, Ruth, okay? Okay. So just to frame this, Ruth, you sent us a couple, for FY '13, sort of a nice two-page summary of FY '13. What I was looking to also be sure that we got was finalizing this report. That's really what I was after. We had previously met and discussed back in July, the FY 213 preliminary report. So we just want to be sure that you have this finalized and that it can then go on the website like we did the previous year, okay?
There's very few changes, there's like 2 changes.
Okay,
So it's
yeah, no,
almost-
I'm just saying, make sure that it is the right information that gets to go up on the
Okay.
website, all right?
Yep.
That's all, and I remember in this, what was missing was a discussion of the turn back for the schools, which you do have on this little two-page
Right.
summary. So if you want to just briefly walk us through the two-page summary, which of 2013, okay?
Okay,
Just to reinforce and reiterate a little bit of where things were at. I do have one fundamental question that I'll get to,
of course.
of course.
Okay, the
Doesn't make me a
expenditure,
bad person.
What page are we on?
So we're
I'm-
looking at the revenues page, Ruth, or
oh, I was gonna start with the expenditure
Okay.
side, doesn't matter,
that's
whatever.
fine, follow your lead.
Just as a recap, the increase in the budget from fiscal 12 to 13 was $597,000 or 2.46%. Do you have a question, Paul, or are you?
You're just trying to find the
Oh.
right
I'm
schedule.
trying to
Right.
find the right
You got it?
I think so, Paul, you're on this, let's just say
On
right
this
there,
page?
that's correct, yep. I'm sorry, go
Okay,
ahead, Ruth.
so I was saying that the increase in the budgets was 2.46%, increase in expenditures from fiscal 12 to 13 was 2.7%. Amended budgets include transfers at town meeting from free cash and the overlay, which is part of the spreadsheet that I gave you, so you can see how much money was added to which budgets, or actually by categories on the summary sheet. Turn back.
That's the column that says transfers from free cash.
Yes.
At annual town
Yeah,
meeting.
and-
And those would be, as we've referred, when people vote on them, as supplementals?
Yep.
Okay,
Yes.
Yep.
And some of that money actually this year came from overlay release
yes.
at the last town meeting. Turn back for fiscal 13 was 29,000 less than what we received back in 2012. Encumbrances was 27,000 less than what was encumbered in 2012. And I gave a little summary about what turnbacks mean to the town. The money that comes back from the budgets goes into part of the free cash calculation. And so we encourage the department heads to turn back money if they possibly can.
And we have a history of, even though there may be pressure not to spend what's in the budget, in some other organizations and locations, people think, well, if I don't use it, I'm gonna lose it in
Yep.
the next budget cycle. But that
That's-
pressure hasn't necessarily been exhibited in the town of
No,
Sherborn.
we haven't done that in
Here
town,
And advisory.
although all the departments still say that that's their concern. So we do have some departments that spend right down to the penny.
Yep.
There is an expectation every year that there will be some turn back from some of the departments. This year, by categories, the general government, the turn back that made the biggest difference was the town administrator wasn't hired until March. So there was a piece of that
Budgeted payroll.
budgeted payroll that was used, but we had a $27,000 turn back on
Yep,
that.
yep.
Building, and some of them are just that they anticipated things that didn't happen. The building budgets and the election registration salary both had turnbacks of over $10,000.
Yeah.
Under public safety, the fire salaries turned back 16,000 in salaries, and that's mostly, I think, because they just can't anticipate what's going to happen at the end of the year, so they like to figure there's going to be more brush fires, or I don't know. It's just in how they estimate it. The education, the turn back was sorry, you gotta look. Turn back was 253,000, of which a big percent of that was the circuit breaker monies that was budgeted under the budget. They did get more money from the state than they expected. They usually project 40%, and they received 70%. And also, there were students that they had anticipated needing this service, and they were placed in-house instead.
So that state money coming back for out-of-district tuitions and transportation.
Yeah.
And we anticipate some amount,
Yep.
not the full amount that typically comes back,
Right.
and so we get the benefit by coming in under budget, in essence,
Exactly.
in
Yep.
layman's speak.
And the CM&D was operating under, they had a turnback of 27,000 in salaries because they actually, I think they had 2 people short of their budget,
Yeah.
2 people that they hadn't rehired. And they did transfer some of those funds at town meeting from salary to expenses to cover contracts, outside contracts, rather than have their staff doing certain duties.
Okay.
But
Any-
does that net out to 53? In other words, the transfer at the annual town meeting doesn't change the turn back, or does it?
No, it doesn't, no. It just puts it in a different place. In anything from elderly housing or farm pond, which is voted from their reserve for appropriation accounts, is returned at the end of the year. So balances that show under farm pond or elderly housing, if it's not encumbered, goes back to the revolving fund. So the other category is encumbrances, which people, if they've made a commitment at the end of June for supplies, services, or something that they have not received, or the invoice has not arrived yet, they can encumber funds.
And that's also an opportunity to use up what's left in your
Yes.
budget, right?
Yep.
And so that's why I'm glad I asked you to do sort of a rough overview of what makes up these encumbrances, and it's good
Yeah.
to see that here, so look forward to that.
Most of the smaller ones are just supplies that are, something that hasn't arrived, or a utility that hasn't been paid for the month of June. Under treasurer, there were some bank charges for June that were late coming. Employee benefits, you have unemployment that was expecting to be received. Town buildings had ordered audio for the meeting room, and that bill came in after the end of the year. Town clerk was encumbering money for preservation of records. The school buys a lot of supplies and books during June for the following year, but they order them in June, and if they're not arriving in if they don't arrive until July, the money is encumbered.
Right, so still, even though well, I'll let you do the next one, and then I'll say what I've said.
Okay. The school payroll is $372,000 encumbered because they, by contract, are paid through the end of August, and they can opt for a lump sum paycheck in June, or they get paid through the summer. The ones that elect the summer pay their money is
Is part of this big encumbered number. And so in spite of the encumbrances, that's already reflected in how you've determined the turnback or the
Yep, it's all part of that
excess,
calculation.
below the budget. Yep.
Is there
So
anything?
the only other big one is CM&D. No, that's
Yeah.
good. It's up to these gents if they have any questions. I just would reiterate both on this page, and then when we talk about the next page, to true this up
Yep,
with this thing and attach it, or somehow we add it to what we put up on the website. So and use the explanation you have for education, add it to this guy.
okay.
So even though there's a little redundancy, some folks might just want to read this, some may want to look at that, or both.
All right.
And I think that's very useful. I have no other questions on this, though.
No, I just, general question, Peter,
Please.
procedural question. How do we get to the turn back numbers? I mean, is it the practice to put some flexibility into the budgets so that at the end of the year, we're likely to have turnbacks? Or is this just reflect we were off on the estimating for those particular budgets?
Yeah, I mean, that's always a perennial question. Are we over budgeting? Because we're generating nearly $500,000 in turnbacks, we're coming $500,000 in under budget. Half of which, or more than half of which, is related to this school department, the bulk of which relates to circuit breaker monies. And the out-of-district prediction in budgeting is a bit of a challenge. And right now, the stance, and I think general practice, is to not project the full amount coming back from the state on the known out-of-district students. And so there's a good couple $100,000
That's a
swing right there.
good half of that
But
turn
but
back.
the broadest thing is to look at what percentage of the total nearly $25 million budget does that $500,000 represent, and is that a reasonable amount of surplus, right? And the other way to also look at it is, it's a timing thing ultimately, because it does become part of the free cash. It is how we replenish free cash.
Right.
And there's few other sources of replenishment of free cash. And we're still, for years now, have used a lot of free cash. We were much more disciplined this past budget cycle. Presumably we'll be even more disciplined and use less of the free cash to offset the budget.
Okay. And Ruth went through the different items, but for example, on this page, general government and public works, between the two are in excess of 100,000
Right.
more, and the town administrator position only accounts for 27,000 of that. So there was the budget was maybe unduly pessimistic
Right.
in that case for those, and I wonder if there's a practice of trying to bring it within 2% or 3%.
Yeah, I don't know that there's a particular guideline, and I'll let advisory speak in on this, but back when I was on advisory, we did get very disciplined about looking at actuals as opposed to budget to budget. And so you want to understand what the actual costs incurred were in a particular department, and then view that versus what's going on with the budget, and make sure that there's no, it's the fat in there, if you will.
Right.
So I think that folks have gotten, the advisory folks are pretty good about that. I expect they'll be looking at that pretty carefully.
We're actually hoping to modify the form that the budget makers turn in when they turn in their budget, to ask them actually to explain over the last couple of years if you've had a discrepancy either up or down between your actual and your appropriated. Could you explain why that is the case? So
Right.
hopefully, that hasn't been directly on there in the past, and I'd like to put it on this year.
Sure, but, and the other thing is that we also do have, for example, even on CM&D with the turnback, we still had, and it was mostly snow and ice, I think, we did a supplemental transfer at town meeting of 130,000 because we
That was
just
mostly
level
snow and
budget
ice.
that, we don't budget to the actual experience and something like that. Likewise we do with the legal and some of the police overtime historically.
Just a word in defense of the school budget and the turnback there. The circuit breaker money is dependent in part on the state and on funding levels on the state side. That was in flux most of the year, and there was a lot of back and forth on that. And it's also based on predictions of what the needs are. And that depends in part on who's attending the school, who moves in, who moves out. So there's a lot of unknowns there. So the art of budgeting often involves reasonable guesses about what will happen. And it can't be all that precise.
Right.
Right.
And so the other art that we exercise is in projecting revenues, right?
Yep. That's it, even harder. Okay, on the revenue side, the revenue collected in fiscal 13 was 100.59% of the estimated. I take a couple minutes just to explain. Estimated revenue does not include taxes, and it does not include any miscellaneous revenue.
Okay.
It's including all the other items that are listed, and state aid is held separately from estimated revenue. So at 100.59% of the estimated revenue at the end of the year,
Well, that means we were pretty close in our
We're-
prediction. You had a few swings,
right,
like,
mean, that was-
if you use excise taxes as a good example,
that
right,
100,
that's a big number.
yeah, that 100% actually was the total, including taxes and everything.
Okay.
The total estimated revenue was 111%.
Yeah, yeah,
So in the prior year, it was 116%, total estimated revenue, and the total revenue was 101%. So in a budget that size and estimating that much money to be 1% off is right on target. And I don't know if that's good or bad. It'd be nice if we had a lot more money coming in so that I could be way off.
But what really matters is the estimated revenue and the miscellaneous revenue
Yeah.
projections when it comes to budgeting and what
Yeah.
people wind
See,
up
I
paying their
don't-
taxes on.
Yeah, I do not, if it's a non-recurring revenue, which is what miscellaneous, falls under miscellaneous, we do not put it into the estimated. So whatever shows up under miscellaneous is
It's a free
a
cash.
free cash, it's a bonus.
Sure, yeah, it's a
Yep,
bonus.
so we kinda
Yeah.
like to get those one-shot
Yeah.
deals.
Yep.
Um,
All right, take excise taxes, you projected 650,000, the actual
was 700,
collected was 716.
the
you
prior
know,
year,
I think we put a little squeeze on you to project a little more
I
of
did,
various
for
items for
14,
14.
these numbers have changed a little bit.
Yeah.
The whole, as I say every time I sit here, the DOR iterates and reiterates and yells at us about being conservative in our estimation on
Okay.
cash.
Yep.
On estimated revenue. So I try to be conservative.
Right. So in your summary on the bottom here, Ruth, where you say
Yep.
impact on free cash calculation,
Yep.
i.e. what's replenishing free cash. In that, however, I think you don't have the miscellaneous revenue. That's in addition.
No, that's
To
part of, that's all, the excess of revenue, excess over projection includes the
That's only-
miscellaneous.
Are you sure?
No,
And the reason I ask is because when we did this before, so there's a discrepancy
No, it
from
should
what I
be
looked
right.
at before.
Oh,
right? We said we had 294,000 in revenue surplus, which was, I think what we did is we added the 119 plus 174 or something, because it shows up on this
I'll have to check.
very small, bunch of
Yeah.
small number thingy that I'm sure is the source for this. So
Yep.
let's just double check that.
Okay.
Maybe we have a little more than we thought, or we were thinking we
Or,
had more back in July.
Back in July,
Okay.
that's quite possible.
So
I'll
so
double
one
check.
way or the other, we either had 586,000 in total surplus to replenish free cash, or there might be another 175,000 of the miscellaneous revenue, which you
I'll
don't think
double
is
check.
there.
I don't
but you're
think
gonna
so.
double check.
No,
Okay.
I don't
That
think
was
so.
my core question.
That was your, oh, okay.
Yeah,
Good.
yeah.
Is there any, there's not, it
No, that's good.
pretty much covers all the,
It's a healthy, it gives us a good look back at last year, starts us thinking about 14, which segues to your next little ditty here.
yeah.
And this is not really a full first quarter, if you will, because you haven't closed out, or maybe it is.
Well,
Maybe
it includes July, August, and September, that's
So it's the
four
full-
full months.
So would you,
I mean, 3 full
would you
months.
be able to do one of these then, based on that, or?
Yeah,
maybe-
I could.
Maybe
It's
we
just,
don't want it.
I was just gonna say, the last time I was, some comment about not needing all that much information, so, I held off doing it.
Paul, we were trying to do it on a monthly basis, I think probably quarterly is just as well. And the question is whether this, which is a sort of a 2-page version of this without all some of the gobbledygook, may satisfy our keeping on top of what's going on. So I want you to think about, if you have any thoughts on that. And also,
I'm gonna follow your lead on financial issues. I'm content
with
with
this.
this, but if that is of use to you, I'm more than happy to support you in it.
Well, I know you put a lot of effort into putting this together, this sort of formatting, which was viewed as a useful tool for the less financially experienced folks on the board. But I think this tool really is even
it,
maybe more useful.
pretty much because
I
it,
defer to Mike. I mean,
Yeah.
I don't know if you've even seen this type of thing, like.
we saw it at the last
We saw that a
meeting.
few weeks back. So it really is whether we want to also have Ruth do this in addition to
Yeah,
this.
and I'd just like to ask Ruth a question to tell me again what's in total estimated revenue? And-
What's in that number?
Yeah,
The, if you take the meals tax and go down to earnings on investments in
Yeah.
that those categories, state aid is not included, but everything else is.
Okay,
State aid
so-
is a number
so
by itself.
personal property taxes and state aid are their own numbers, and the rest of it's
Yep,
included in estimated revenue, and then estimated revenue is part of total revenue?
except for the miscellaneous is not included in estimated. But when I do the tally for how much money the revenue was, I include the miscellaneous. But it's not part of my estimate at the beginning
I'm
of the
trying to
year.
get from estimated revenue to total
Right.
revenue. So for
Okay.
estimated revenue, you add in
The,
miscellaneous,
yes.
state aid, and personal property taxes?
for the absolute total, but for the estimated total, I just add in miscellaneous.
All right, you lost me. Total estimated revenue you've got on this
Yeah,
table, and you just told me it was everything from meals taxes to earnings on investment, not excluding state aid, right?
yes,
Okay. So to get from that to total revenue, you would add back in state aid, personal and property taxes, and then you would add in miscellaneous also?
and miscellaneous is part of that, when you're saying total estimated,
I'm just using
estimated,
I'm using your
Right.
numbers. Total estimated
Okay.
revenue and total
that
revenue.
includes, when you say total estimated revenue, that includes, if you look at total revenue,
Yes,
that includes everything, from
Okay.
top to bottom.
gotcha.
Okay, then the estimated revenue removes the property tax, state aid
Ruth, when
in column one.
when I add up the column of numbers, it doesn't come out that way. I think Peter's correct on this, because you have
I'll have to check
state
it.
aid going up, you have excise tax, well, you start with excise taxes, which are included. right?
Great. Mhm.
So excise taxes went up 66,000.
Yeah.
Rentals went up 4,000. Other department revenue went up 40,000. You've got license permits went up 22,000.
Are you looking at last year?
No.
Looking at this year?
2013.
He's looking at versus
Oh,
what was projected
committed?
or
How you got-
estimated,
I thought the 119 was the delta between the actual and the committed.
excluding property taxes and state
Right.
aid.
Those
it's the delta between what I originally estimated
and what actually
and
happened.
what actually happened.
But
And-
I'm suggesting to you that you say the total is 119, but if you do the arithmetic, there's 66,000 in one line already.
Okay, I
There's
said
40,000 in another.
I did say I would check it. I haven't, I mean, that we've moved on from this, I think.
So that
I
really
did say I
totals-
would check it,
So I think we have 174 more than we thought,
Yes,
which will be,
but I will check
Just
it.
based on
yeah.
trying to do some arithmetic myself here,
Okay,
without a calculator.
okay.
Oh, we know we can give you stuff to,
This exercise is pretty useless if the numbers aren't right, so.
yeah. So we'll get that right, okay.
Yes,
Great.
I
So-
would note for the record, though, the things I'm proud of is that state aid has gone up consistently. And that's, I've been screaming and yelling constantly on the state level for that. The meals tax has pretty much come to where we
Yeah.
estimated it to be
Yeah.
originally when we adopted it. We started out at 23, but we got all the way up to 30,000.
Yeah, that's right.
So that was a successful initiative for the town. And we have asked people to look at their fees to make sure that we're current, and I see that things are on the upswing. The revenues from license and permits are up 22% over what you estimated. So something is working. All the little
Yep.
steps we took
the little bits and pieces.
added up.
Okay, you want to go to the first quarter there, Ruth?
I thought I did.
You did? Okay. Well,
I
just,
thought that's where I was.
everything's on track is what you're saying
Yes.
based on what I,
It's,
just
I
to
mean, first quarter is really difficult to highlight any big major things that are
And
happening.
this is purely cash basis. I mean, you're not
Yes.
doing
Nope,
accrual
nope,
basis.
not at all.
We don't know if we have 3 months' worth of legal bills. We only have,
Well, I do know that we don't, the legal bills on this report aren't reflecting the 3 months because the bill didn't get submitted on time.
oh, okay, so that was the
So
question.
there is some legal bills that got paid in October for the months of July, August,
Right.
and September.
Okay, and we might have
But I
paid in
didn't-
October, transfer station,
Possible,
takeaway stuff
yeah.
or whatever. I think we,
Everything else is pretty much online with,
okay, certainly the payroll and all that kind of
Yep.
stuff is on track. The revenues are based on cash receipts, basically.
yes, absolutely.
And nothing is out of whack on that, is what you're saying,
No.
right?
No, pretty much
We
on,
we seem ahead of where we were same period last year.
yep. And that's, that's because we got the Odessa money in August, and
Yeah.
usually it doesn't come in for later on.
Yeah,
So it's all about the timing of things.
okay. And the balances remaining in the expenditures, there's nothing to say we've got anything to worry about. I did
No.
have one question. You talk about insurance employee benefits, and you refer to MCR assessment being 83 grand higher than last year.
Yeah.
What is MCR assessment?
Middlesex County retirement, that's retirement.
Oh,
That's where Pete pays that up front at the beginning of the year and gets a
oh, no,
discount.
so that's the big increase we
That's the-
saw in
right.
that number.
Yes,
In this past budget cycle.
Yeah.
That's it went up
the
14%.
assessment, right, it included, the,
We'll be talking about that later when we have our little
okay,
picture show. Okay, that's good to know. So that's the big change, period to period, last year
yes,
versus this year's.
Is the tax, just tax payment timing?
No, is the pension payment, pension plan, employee pension plan.
now you're on
payment.
expenditures.
I'm on
Okay.
expenditures. I kind of did the whole thing, in
Yeah,
brief
yeah, yeah,
fashion. So if you have any detailed questions, gents, please,
Well, I
Fire
think
away.
I know the answer to this, but for example, burial fees and library fines, those aren't general revenues to the town. Do we have dedicated funds for those?
No, everything that's on this is general fund revenue.
I thought the cemetery had a,
Their burial fee is, general fund revenue. They have other monies that they collect that go to the enlargement fund and
Okay.
to their, perpetual care fund. So that their monies come in and go to different places.
It always amazes me for library books that we would have $5,000 of fines if people
I know.
don't return their library books on time.
Yep,
I always return my library books.
you do. Okay, well, that's good then. You don't have to pay any money.
I'm a slow reader.
oh, you're the reason the town's budgets are going
That's
down.
right.
I see, I should
We
hold the
need you
books
to be
longer.
late.
yeah. Yeah, exactly.
But sort of the other general comment I would make, is from sort of a big picture, is that as we go forward with the new budget cycle, what we do on the state level is that the governor and the legislative leaders reach a compact on what the budget number is for next year. The budget number for next year has the revenue side and the expenditure side, and the very important number is reaching agreement on what we expect for revenue in the town. And that process hasn't really been a formal process here in Sherborn. It's been one that different people provide different numbers and then people add it up. But on the state level, it's almost like the Mayflower Compact.
I guess I would say, Paul, on the local level, personal and property taxes and excise taxes are such a huge part of that. Things that we don't have as much need to estimate. For example, we know what the tax base is going to be, right?
We know what the tax rate base is going to be, but excise taxes, for example, if you look at last year's estimate was $650, the actuals were $713, and in part of that, with an improving economy, people bought cars, and newer cars so you can have the same number of cars in the town, but if they are newer cars, the revenue is a lot higher, and if they're older cars, the revenue is a lot lower. So what number do you pick for that revenue item?
Well, for one, you can only increase it, I don't know how much it is, Ruth, from DOR.
Oh, sorry. I was like, where's that coming from?
He's sitting right there.
But from the sound is like coming
Yeah.
from here.
When you're adjusting your revenue numbers and reporting them to
Yeah.
the DOR, you can only increase them by a certain percent.
There's a certain percent that I'm allowed,
Right, unless you,
unless I have a
Justify it
good
in some way,
justification for
yeah.
it.
and if you're within 1% of what you conservatively estimated, I would say that was cause for concern, because
Yeah,
you don't want it.
you don't want to be that
That's
close.
close, yeah.
Oh, okay.
yeah, you have to, yeah. And motor vehicles is one of the things where
But we did,
they could be consistently, they go all over the place, but if everybody bought a brand-new car and a really expensive car one year,
yeah.
and nobody bought a car the next year,
I think next year's discussion on this will be interesting because for this current fiscal year budget cycle, we did push you a little bit to be not as conservative as you've historically been, in part to avoid using free cash and make up the difference. Though the pushing was based on sound rationale.
At that
However,
time.
at that time. However, it remains to be seen whether what was projected will in fact materialize along the lines projected. Okay,
But based on the revenue numbers, we actually could have pushed a little more.
that's right, that's right, that's right.
well,
Well-
that's all crystal ball stuff, so, it
Hindsight is
depends on
20/20.
We went as
how
far
much
as we could
chance
go.
you want to take.
Now, don't fold your thing up, because I have a Columbo-type question, One more thing, if I could. Because we talked about briefly, it just reminded me, I did have another question on the personal and property taxes. It's a known amount based on valuation of the existing property, personal and property.
Right.
Yet we're off. We collected 155 grand less than what we projected in fiscal 2013. So could you just explain that? And, you know, there's delays, and what you look for, what I look for, is if there's a canary in the coal mine, if you will, particularly in the past few years, given the economic environment, whether there were some people that really ran into difficulty in the town, was at risk of not collecting.
Where are those abatements?
That's really, that's a question for Nancy, actually, because I have no connection to whether people why they're not paying their bills. All I know is what we get.
Well, I'm just looking for a general framework of why what we get is less than what we anticipated. What are the typical situations?
There's never gonna be
100% collection on time.
100%, exactly.
And we have no sense.
And there could be 1,000 different reasons why that person hasn't paid those taxes. It could be a timing thing. It could be that they're in the middle of selling their property, or I don't know.
Well, that would be one area, just to eyeball, see whether it's much bigger amount or a lesser amount than the historical trend, if there's any trend type item showing up from there.
It shouldn't be abatements, because in order to
It's
get
not
an abatement, you
abatements.
have to pay your taxes
First, yeah, that's right.
Right.
So
It's-
the abatements come out of what's called the overlay account, which is
Right.
a different account.
It's not.
So this is actually a shortfall in the initial
Collection.
payments.
Collection.
Collection, it's the collection.
So we'll look back a few years to see if
Just to
that's,
see if there's anything, and just a more general, and maybe provide a little blurb in this thingy that goes up on the website, so that we all are smart in this
I
stuff.
will tell you, that commitment is made, and it's there, and the town will.
Ultimately
someday
get
get
it
its
when the
money.
property changes
Yes.
hands.
And that 150 grand is gonna come back to us more, at a higher interest rate and fees than we
But
would have
it-
gotten sitting in the bank.
But
that's
it's,
it.
but it's also 150 grand we don't have in the bank as far as free cash goes.
Right, right.
That's a phenomenal rate, 99.27.
That's a great
Yeah,
collection rate.
I think you
Statewide, that's
can't
a phenomenal
sneeze at
rate.
that. I mean, that's like amazing number
Right.
for collection.
Yeah.
And Paul, going back to your comment before about the revenue estimates, I understand the general point, but if you look at these numbers, it's an 11% of just a little over $1 million. So the total excess, I guess, is 119,000. Even if these estimates had been a lot tighter, you're talking $10,000, $20,000 maybe difference in revenue. I mean, it may be worth bearing down to figure that out ahead of time, but it may not be. You know, we may be better off. It looks like we've been about that close, you know,
Pretty consistently.
pretty consistently.
But it's actually, it's the 120 plus the 174 are almost 300 grand.
Well, I don't know how you're gonna estimate miscellaneous revenue. That, I don't even know what's in that category, but I don't think you can sit here and say we've got miscellaneous revenue. That sounds like that's windfall.
Oh,
It is.
usually it's tax liens that are put for, they're redeemed by the treasurer. Somebody doesn't pay their taxes,
Yeah.
it's the 150,000 that we just talked about. We know that it's gonna come in. We just don't know when.
Mm-hmm.
But if you look back over the last couple of years, somebody doesn't pay their taxes, she puts a tax lien on it. When the property's sold, or the taxpayer has revenue, or whatever happens, they pay the town. So it's a late pay, but you can make reasonable projections over a number of years that the less than 1% of taxes that isn't paid each year
That would be
is
collecting
in
that
fact
every year.
will be collected the next year.
That would make sense to do that.
And then you could project that, I mean, if you put the work into it, you'd probably find that we are picking up extra 100 grand of real estate taxes every year from stuff that hadn't been paid in prior years.
Yeah, and that's fine. And my point was on all these other budgets. I mean, we could bear down on fines and forfeitures or cemetery burial fees, but I really don't know how you'd make a
Yeah.
predictably more accurate estimate of revenues from funds like that.
No, that's right. But I think we dug in about an extra 20 or 25 grand, because we really needed to in the budget process this past season. But as to miscellaneous revenue, you can't project that and count on it in your budgeting
No.
process. However, you can use it, I would call it
It's
a
part of the
back
model.
pocket,
Right.
some sense of assurance that you may know of that by the time you're doing the budgeting that comes in the fiscal year. And that's a future free cash equivalent, if you will. It isn't gonna be captured in the free cash number that
Well,
you're
it looks like
working
we've
off of.
already
But this
collected
one's-
77,000 this year
Yeah.
through September, so we're ahead of last year's rate.
Right.
And it would be interesting to know, we probably would be able to tell what these particular items are, if they're all, as Paul suggested, or if there are other things that are in there too.
I
Well,
agree.
it includes the Odessa revenue, for example, and we know by contract what the Odessa number is gonna be, and it's gonna come in.
Right,
It's just a timing
that's
issue.
part of, yeah,
If it
that's
came
all part of the
in 4
calculation.
months earlier, it'd be in.
one year or the other,
Well,
Right.
this says it's in licenses and permits. This
right.
summary says it's in licenses
Well,
and
the
permits, not
miscellaneous, she
miscellaneous.
says, no, the miscellaneous, she says, was tax liens, 41K of that this year,
Mostly due to tax liens, right?
mostly due to tax.
Right,
liens.
license and permits is Odessa,
Yeah,
but I was looking at just the miscellaneous number. So we're ahead of last year,
that's right,
and it suggests that it's more redeemed tax liens this year,
that's right,
and whatever else goes into that.
that's right. But it certainly is an area where it's an extra little piggy bank worth of free cash, future free cash to be smart about in the budget cycle. Good. Any other questions for Ruth on this?
Well, just my perennial question,
Go for it. Come with
which
it.
is, now we've gotten this far, can we get Department of Revenue to certify our free cash number early? We're now in October.
I'm hoping to get it done early. Anything like this takes a ton of my time away from doing the things that I need to be doing to get free cash certified. But I'm still hopefully on goal for I thought it was gonna be the end of October. Now I don't know for sure. November,
So you would
Yeah,
submit something. When
In
you submit
November.
a number,
Right.
you submit information to the Department of Revenue.
yeah. I have
And
to,
generally, is that information turned out to be pretty close to the certified free cash number?
well, I mean, I don't come down to, I give them pages and pages of all of this put into different forms. And
So
then
you don't know
they
what the
take
net
it.
number is. They determine the free cash number. We don't.
They tell me what it is. I can make a guess when I get to that point where I've got all that information in the right places.
Well, it would seem to me
When I
that would
send
be.
it in, that's when I can guess what it's gonna be.
All right, well, my point is that I think it would be nice when you send it in and you have that guess, that we're aware of that guess
Yep,
in our budget cycle versus waiting for the Department of Revenue to tell us the number and us trying to look at the stars and figure it out.
I thought the last time we talked about this, we had a date.
We did have a date. We did have the end of October.
The end of
I think.
October.
To the end of October.
it may not happen, that's all I can tell you.
All right, well, that's ultimately you guys. On the same lines a little bit, the audit process.
They're
and
starting in
expected timing
November.
for their report, because we also want our objective was to get them to issue a report, or at least issue their draft
Mhm.
report, subject to, some tweaking.
They start,
in time for the budget process,
they're scheduled to come the first week in November to start.
for their
Done
validation
their
of stuff.
preliminary.
And that's typical, that's earlier than usual, or the same time? It's
No,
earlier than they
A
normally
little
come
bit
in?
earlier.
Okay. So we think that we would have pretty much a good idea of what the audited numbers will be sometime by the end of the year, early January? Because that's our
It
goal.
depends on the auditing company and how much,
We've been working
I
with
mean,
these guys for 8 years now.
I know,
so we
but
that.
I don't know what their scheduling is. They've got a lot of other towns they have to deal with. I'm hoping by the beginning of January, they will have something for us.
All right, well, would it help if we reinforce that desire with
If you
them?
want to, feel
Well,
free.
I think
I
we
don't know
all
if it would
agree
make
that
a
it's
difference.
important to have that.
I mean, they know what, they know. I've already explained to
Or send
them.
them a letter
Yeah,
requesting that they wrap up their audit
Yeah,
early.
yeah, we're anxious to get it early and therefore have it available for our budget cycle.
I
So
mean, I'm
maybe-
pretty sure we conveyed it to them
we did.
latter
They
last year,
did,
that's why
yeah.
they're starting earlier.
Okay,
I know I have the date kicking around that we had discussed with them by the end of December, that we would have the financial statements,
okay.
but we can reiterate it.
Are they on track, or is that?
Yeah, they'd be on track for that, yeah. It's not gonna be the finalized on it, but it'll be those financial statements. I'm thinking that they should have by end of December.
Well, the more information we have, the better we can do the budgeting process, the better we can explain to the citizens of the town what the town's condition is.
Yeah.
But we'll send something to them saying that that's what our expectation is, and then
Right.
see if they
Okay.
say that can't happen. Or can
Good, and we, the other thing we had talked about previously, a couple of times, was the internal audit effort. I don't know if how
Mhm.
that's going, if
Yep.
there's anything you can sort of bring us up to speed on,
We,
what you're sniffing around on internally and so forth.
we have my assistant and I have a plan of which, kind of an order of which departments we're going to do. We got halfway through it, and then we're just bogged down with end of year stuff. But we're continuing to,
So have we touched on any area that we've started to look at, or is it more
well,
just?
we've put together all the information. Now I have to sit down and we have to discuss
What you're gonna do and look
what,
at?
if we feel there's something that needs to be done, if it's working, there are some departments that are absolutely fabulous. We have no problems with them at all. There are some others that are more complicated, and we have to sit down and try to figure out what would be the best resolution or,
Well, it would be helpful if you kind of let us know, maybe through David, what areas we think you
Mhm.
guys think are the best ones to look at, just so we have a sense
Yeah.
of what you're looking at, and we might have other thoughts, I don't know, but that would just be helpful. Because it's not to suggest any departments or personnel are
no,
doing anything not well, right?
no,
It is
no,
more.
it's just a process.
It's prudent business practice
Right.
to do this, and it was recommended by the DOR and
Mhm.
so forth, so we're following through with that, and it's an objective of the board that you do that, do it well. So part of it is, I guess, scheduling around the known workload challenges
Right.
that you deal with on a recurring basis, like this stuff, like audits, like the
budgets,
annual report, like budgets. It's all part of the
model,
whole thing, so squeeze it in, there's plenty of time in the day.
right.
Okay, anything else for Ruth while she's here? No, you guys are good?
Just thank you for all the work. Thank you for all the.
Thanks for coming in.
Thank you, Ruth, appreciate it. It's always good to see you, don't be a stranger. All right, so that puts David on the spot, and you want me to sit next to you, is what you're saying.
Yeah, that way I can,
Kick me under the table? All right,
So you gonna do a slideshow?
we're gonna
So
slideshow.
I'm gonna sit in the front row then.
Yeah, why don't,
Watch the slideshow.
there will be a
so,
I
so,
wanna see the
so
puppet
so what prompted this slideshow was initially, I serve on the school contract negotiation team, and one of the elements of working with the teachers was to help educate them about the town of Sherborn's financial position, basically. And this morphed into, gee, this is a great little thing that we could put up on the website, also have in advance of budget season, and also discussion with you gentlemen and so forth. So David, I asked for some particular types of information, made some suggestions of things. This is more in a narrative form. There's not a lot of numbers to look at. There's a couple of good charts. But it's food for thought, and I think it summarizes things well. And we've added, at the last minute, I asked David and Ruth to come up with some additional information, which we're going to come back to one slide and spend a bit of time on, because it's a big picture thing that I think challenges the town. So that being said, it's a nice presentation. It looks great in color, not this color, but this is a black and white PDF, I think, is what we're dealing with, right? And even though my name comes first, the bulk of the work is really those two people listed below my name. They did all the work, did a bang-up job. So that's the framework, and David's going to walk us through it. I may or may not add some things into the discussion here.
I think we need to add something in the budget for a new project.
Well, we have that thing, and I don't know how that works. So we've already paid for that, but,
So I think this is the red, green, blue, and green is the only one working.
oh, okay. Well, that's Diane. She's got to deal with that stuff.
So we basically broke this presentation into 3 chapters: financial picture and challenges, trends and considerations and summary. Looking at education, it's the largest part of the town's budget. It increases at a faster rate than non-education items. And demand for a quality education remains high, but per capita spending on education is the highest in the Commonwealth and can't continue to grow faster than revenue. On town government side, departmental service delivery commitments are challenged. Staffing is limited. There are very few full-time positions. There are very few office hours. Most offices are only open 4 half days each week. Town public safety departments, police, fire, CM&D, doing more for other departments such as cemeteries, library, recreation, schools than before. And departments scrutinize general fund expenditures to look for opportunities to shift costs to other departments that have other additional funding sources.
So it gets to be challenging, departmental turf battles taking place. And
The Sherborn demographics. Sherborn is commonly seen as one of the most expensive communities in the Commonwealth. It has a significant portion of households on a fixed income.
And I was surprised, I've seen some information on that. I was surprised to see the percentage of the population that are on fixed incomes.
Is it 48?
Yeah, I think it was nearing 50%, yep.
Aging population is struggling to stay in Sherborn. Property values down with a steadily increasing tax burden, and no signs of tax relief in the near future. There is an increasing demand from all residents for higher quality services, and Sherborn employees have survived the Great Recession well with virtually no unemployment and very little turnover, unlike some of the residents. So I think on this slide I wanted to point out when you were saying the collection rate on the 2013 taxes.
Yep.
Compared to last year, the commitment went up, took 610,000 more out of taxpayers' pockets, and 0.5% less compared to the previous year was brought in. So
Some pressure showing there.
Yeah.
Yep.
Challenges: the tax rate is very high, budget is tight, continuing reliance on the use of free cash. The Selectmen and Advisory Committee have avoided an operating override. That's an unpopular last resort to close a budget gap, and I think the last one was 2004 or 2000?
Maybe 2006, I think.
2006.
Yep.
Employee health insurance and retirement are the most costly benefits. They increase steadily, absorb more and more of the budget, and the related unfunded liabilities will definitely have a crushing impact.
And we saw a brief thing there just in terms of when we talked about the pension contribution being for 81,000 or whatever the number was, higher than Ruth's analysis. And we will have a slide that will talk about the unfunded liabilities coming up. We'll talk more about that.
And significant pressure to find valuable efficiencies and new sources of revenue, but very few options result in a positive financial impact on the average household, or that do not sacrifice Sherborn's rural character. Some trends: school budget has risen 140% since 2000. School expenditures increase at a greater rate than the town. Schools utilize an increasing portion of annual budget. Revenue and expense variables cause future uncertainty. This is a budget expenditure trend. Basically shows general government as a dotted line, school and education as a solid line. And that goes back to 2000 and ends with FY13. I don't know if you have any comment.
No, it's just good to see it graphically that way. You can see the different increases in the slope and how do we pay for it all.
This is a school budget versus town budget trends. Basically, the bars on the bottom are the school and education, and the general government is the top, and you can just see that the bars are trending to take more of the budget.
Right. Of course, you could argue that the investment is seeing some payoff in terms of U.S. News and World Report put Dover Sherborn high on the list. I think Boston Magazine put Dover Sherborn way up on top of the list. And so you're getting some of what you pay for here. But
yeah,
this is a good graphic.
Right. You know that you're getting a good education here.
That's right. That's right.
And people have to weigh that on whether they're going to, how much of the burden they want to put over in the future years, which we'll talk about next.
Yep.
So this is a chart we made about declining net
Oh, there we go.
assets.
Okay.
Um,
All right, we're gonna come back to that one, but basically, the key line is the red line, which I call the true net assets of the town. And it's just a different way of looking at things. In the budgeting, all we look at are the costs, the expenses, but this is looking at the town's balance sheet and where it's at, and so I'll come back to that. We'll go through all this, and then we'll come back.
Yeah,
Okay.
yeah. So revenue and expense variables cause future uncertainty. I mentioned that before. You have financial assessments, cherry sheet, regional school, vocational school, state aid to education, Chapter 90 money for roads, veterans reimbursement, and new budget and capital requests, out-of-district sped funding, debt exclusion outcome, unsettled labor contracts, and those are all variables that.
Yeah, all unknowns, and yet we still have to come up with a budget, given all those unknowns. And some of these can swing materially.
We have only one unsettled labor contract at this point.
That's right.
Well, in general, no, that's correct. We don't have really any unsettled labor contracts other than the teachers. Right
Yeah,
now.
I
Right.
thought,
sorry.
CMD, I thought we had.
No, I think we're good with CM&D. We're now good with the police. The teachers thing is in process. It will impact next year's budget cycle. I'm new to the process, so the question is, the goal is to get things nailed down before folks finalize school budgets. So, and I'm confident that will take place.
For considerations and summary, steps the town has taken to reduce costs. Budget and salary increases have been limited to 1%. We've been inadequately funding reserves, OPEB liability, pension liability, capital items, facility maintenance, information technology, road maintenance, and other infrastructure improvements.
And you could spend a whole night talking about all of those items. We are going to come back in that earlier slide with the red line going down to talk about some of these, the OPEB and the pension in particular.
The town now offers a rate saver health insurance plan, which is a reduced premium, and that was due to changes in plan design on the health insurance, and it's pretty popular with the employees. Hiring freeze on all part-time benefited positions, with positions limited to less than 20 hours where possible, and reviewing new fees and increase existing fees, which we've been working on. Mike had requested that be done. We're costing out every fee from all the departments, and that should be done in the next week or two. So, yeah. More steps to consider to reduce costs and tax burden. These are things that we were just throwing out there because they're out there and something we have to talk about.
You have to put everything on the table. That's
Right,
right.
right.
You can't
So-
avoid the elephant in the room.
Right. So some towns can consider an underride, and that's basically a temporary reduction in the amount of taxes that can be levied. Instead of taking the full 2.5% under Prop 2.5, they would only take 1%, and then they would bank that remaining 1.5 as part of their levy capacity for a future year. And they would call that an underride. Some other towns have, looked at expenditure limitations that can limit how much the town can spend. It's like a Prop 2.5, except on the expense side. Reduce or eliminate staff, benefit plan design changes, reduce services, explore employees paying greater share of health insurance or implementing a separate plan for new employees, obtain independent financial analysis of joining the Group Insurance Commission health insurance program, and pursue regional solutions, grants, and more privatizing. But privatizing where it makes sense and that there's a definite cost savings. For a summary, without limiting salary and expense increases to 1% annually, budget projections through 2017 projected increasing annual budget shortfall. Education spending per capita is the highest in the Commonwealth, with 70% of each tax bill going to education. Demand for non-education services is high and underfunded, and households on fixed incomes are struggling. The town's future is being seriously underfunded due to budget capacity and competing priorities. And that's the summary. So we want to go back to the big.
Yeah, we'll go to
big
that
picture.
one slide, and then any questions or thoughts or comments will be certainly welcome. So on this one, what we've done is we looked at the audit reports. We were talking earlier about the auditors come in, they audit the town's books, and they provide a balance sheet of the town, and it comes down to basically a statement of net assets, or if you were thinking of yourself, your net worth, if you will. And you can see it's been skipping along in the $26, $27 million range in the top line up there. However, that net assets, that statement of net assets does include our debt, our capital debt that we do, debt exclusion overrides, it's our notes payable. What it doesn't reflect is our unfunded pension liability. However, in, I think it's fiscal 2015, we will have to reflect that unfunded pension liability on the town's books. Separately, it doesn't reflect the full amount of the unfunded other post-employment benefit liability, which is primarily retiree health benefits. And that amount, there was a requirement to start accounting, disclosing it and accounting for a portion of it over each year. So we have been slowly leaking in some of that liability, but we haven't been leaking in the full amount. And so what we've attempted to do is, and so those two lines, I don't know which one's which, David.
The yellow on the bottom is the unfunded pension liability
Okay.
that's creeping up.
Yeah, so that unfunded pension liability started around, I don't know, $1.3 million in 2007. It's now $8 million is what it is. So even in that one, we do provide for, in our budgets, people's tax bills, does make a pension payment to the pension fund. However, clearly, the liability keeps growing, so somehow we're not keeping ahead of the game. Now, some of the market situation that occurred in the last few years is reflected in this, but still, it went from skipping along in the $4.5, $5 million range over a number of years, jumped up to $8 million. Basically, we lost $3 million of net worth in that period of new valuation. On the
Second line up is the unfunded OPEB.
Yeah, so the OPEBs, we did start reflecting some of that in the balance sheet. That reflects what isn't reflected on the balance sheet. So when you put it all together, we get the red line, which I call our true net worth, if you will. And that, you can see, was around 16 million in 2007. It's now down in the 8+ million range. So we've basically lost nearly half of our net worth because of these legacy liabilities that are out there, lurking out there, aren't reflected on our books. And so I can jokingly say, municipalities follow Enron accounting. We've got these liabilities that are off the books. And I have said that many times. But one way to look at that for the layperson would be if you assumed you had a home that was worth $800,000 in Sherborn, and you had a $300,000 mortgage on it. Okay, the $300,000 mortgage is akin to the debt that we show, the notes payable, built into our statement of net assets, and we provide for the debt service on that. So we're paying that mortgage. However, we also have a second mortgage that we've taken out that in our mind, we don't think is ours, and that's the pension liability, the unfunded pension liability. So we are paying a portion of that. We're paying that mortgage. However, the way we've set it up, when we sell the house, the buyer's going to assume that mortgage. So we still think we have a net worth of that house of $500,000 or $800,000 less the initial first mortgage. Thirdly, we have a equity line, a line of credit, basically, for the balance of a couple $100,000, which is akin to the OPEB liability. In there, we're not even paying the full interest on that because we don't really provide. We just provided $100,000 last year for that in the budget. We finally appropriated an amount. That $100,000 is just for Sherborn's share of Sherborn's OPEB liability. It's probably half of what the actuarial report says we should be funding. So I could argue that we ought to be funding both the full amount and we ought to be funding an amount for the region, our portion of the region's same problem. because none of these numbers reflect the region, okay? It doesn't reflect their net assets, nor does it reflect
Point out the footnotes.
there. And it also doesn't reflect, and we footnote it, it doesn't include any liability for the teachers. That's all up at the state and the Mass Teachers Retirement System. Okay, I don't know what the amount is, but they do, we do disclose in our audited reports what the state contributes to that retirement system each year on behalf of our teachers. And in fiscal 2012, it was $1 million roughly for the Pine Hill teachers, and at the regions, for the full region teachers, it was 3.3 million. So those are big numbers out of our other pockets, not from our town pockets that we pay our taxes. So that's just something to think about in the long term. I think we continue to need to have those discussions. We're teeing it up with advisory. I'm sure they'll continue to have those discussions for the taxpayers. So if there's any questions to this, yes, sir.
Just to make a follow-up to what you just said about the OPEB piece and the health insurance piece, those are both huge liabilities. Those affect every municipality in the Commonwealth, and they affect state government. They also affect municipalities across the nation. The new accounting standards and the new disclosures that have to be made are coming out of the General Accounting Standards Board,
yeah.
which are nationwide. So we're not alone in this, and because we're not alone in this, there has been a series of efforts by our state government to address these issues. Those include, first on the OPEB side, there was phase one. Well, let me talk about pensions for a bit. There was phase one of pension reform a year ago. That over time is supposed to reduce liabilities for both the Commonwealth and the cities and towns by about 1/3 over what was originally projected. There's currently pending, the governor has introduced legislation for phase 2 of pension reform. This will also have a significant downward effect on the rate of increase of new obligations. One of the problems with OPEB is that it continues to grow every year. And so this phase 2 is intended to limit the growth of that by a very complicated deal with the unions and with personnel and so on. I could talk for hours about this, but the heart of it is deferring retirement ages yet again to later dates in return for some additional benefits that will be paid upon retirement. That's sort of the grand bargain. There's a lot of tweaks that need to be made on it so that the legislative committee who's been working on it is still working on it. There was a committee, a commission, a state commission put together. They've issued a report, but help is on the way. After that's projected to get enacted this year. After phase 2 comes phase 3, in which some of the harder issues are being deferred to that later time. On the health insurance part of our obligations, last year there was a couple of statutes passed. One was to make sure everybody moves over to the federal programs and off of the state programs. The other was this health reform statute that allows municipalities to change their health plans without going through this very complicated dance with the different municipal unions. It provides for a fast-track 30 to 40-day process by which municipality can increase co-pays, change deductibles quickly, and that's supposed to generate hundreds of millions of dollars of savings for communities across the Commonwealth. We haven't used it here in Sherborn, in part because we've put together a pretty good deal with the Rate Saver plan. But I have raised, in connection with some of our employee contracts, that we look at where we are in health insurance and see whether or not that should be re-examined. The copay structure, the deductible structure should be re-examined in connection with some of the new plans that are being offered. And there are a lot of new plans now being trotted out as part of the Affordable Health Care Act.
Yeah.
So there's all kinds of new options that are out there. That should be taken a look at as a way of controlling our costs. So this is a long-winded way of saying that a lot of communities aren't throwing a lot of local tax dollars at these problems right now, on the theory that if we sit back and wait a little bit, between the federal government, the state government, and intentioned leaders, a lot of this problem will be addressed and a lot of it will go away. It won't all go away. There's clearly a bedrock that this community has to pay for. There are legacy costs. And so for us, there are things that we can do locally to try and control those costs. And one of those was in one of those slides. The pension and the health insurance kick in for employees who are over 20 hours. And so one of the points that we have made and we are continuing to advocate for is a pretty clear line of trying to make do with part-time employees rather than full-time employees. But obviously we need full-time people. There are jobs, public safety jobs and the like, that we need full-time people. But to the extent that we can get by with unbenefited positions, that's where we need to go short-term until some of these other problems are solved. Being frugal with hiring is another thing that we can do locally. And again, looking at our health insurance plans is a third thing that we can do locally. So there are things that we can do locally, but it doesn't necessarily mean funding everything.
No, and I'm not suggesting that. I'm just identifying that we have $20 million of retiree legacy costs that the town owes, not counting the teacher's retirement, that the town owes, and not counting the region, that the town owes, $20 million, that has been earned and the services have been rendered. So today we owe that for current and past services. And some portion of it we are providing for through our retirement contribution each year, which has been growing at 12 to 14%. I saw something in the news, Plymouth County is increasing their required contribution by 25% because of all of the challenges they're seeing in the assumptions they made as well as the market valuations. The OPEBs, to the extent that the rules change a little bit on what the promises have been made, that may be a great solution. Certainly, there are efforts in the pension as well as the OPEB side of the equation to alter the new entries into the rights to these benefits, certainly. And that over the long term will materialize. But today, as we sit, we owe a lot of dough and it's off the books, and it's not budgeted, in my view.
Couple questions.
Yes, sir.
I'm glad smart people are working on this issue. Not just in this room, but the folks that Paul was talking about. I do sense that some amount of that is just kicking the can down the road, that this is going to be a problem we're always going to have, and at least within our lifetimes. The people who are on these programs are, people who are working currently and people who have worked recently, and they're going to live out their lives, and the municipality is going to be paying for it. And it's not to say it's not earned, it's just, it's something we have to figure out. Question about your, I guess it's the pink line, it's hard to tell what color anything is on this slide, but.
The pension line, the lower one?
Yeah, and so, help me understand how it got from 1 or 2 million to whatever it is, 8 or 9 million in 6 years. Is that actuarial because there are more people in the program? Is that our contributions decreasing? Is something else going on?
I don't know the answer to that, except that, yes, there are actuarial assumptions used previously and currently that may or may not be proving true. So, for example, they assumed an 8+% rate of return on the investments of the money that was being contributed to the retirement fund, when reality shows something otherwise. Now, we are contributing to Middlesex retirement plan. I don't know much about them. I think given that we've certainly bumped up to the 8 million, it's worth learning more about them and how they're managing the town's, the personnel's retirement assets. Because, people contribute, I think it's 11% of every paycheck at this stage for recent hires, goes into the retirement plan. But people go out at 80% of the prior 3 years average after a certain number of years of service. And maybe that 11%, so the difference between what they've contributed and what's earned on those contributions winds up being made up by the town. And that's the $8 million.
And then there are fees taken from that,
That's
presumably by the management, and
That's right.
is that all bid and competitively bid for the management?
I don't know. I think we gotta look at that.
Yeah.
The
Can I
the
just
management
modify-
right now is through the state. You probably can.
I just want to modify something that Peter just said about the 11% contribution and the 80% return.
It was 8%.
Not return, the 8 and some percent return assumed, yep.
The benefit, the stock market plays a key role in here, because the concept of this was that someone would put $1 in like 1930, and then in 2000, that stock, that would be invested, and it would be worth a lot more. And what happened during these intervening years
Right.
was a recession where the stock market tanked.
That's right.
To the extent that the stock market soars, goes up to 15,000, it changes all the equations.
That's right.
Because then the dollars that were put in, the return on the investment by those who are managing the pension funds is actually higher than it was during the recession.
Mhm.
People now are investors are now getting a better return. The better the return, the more the system funds itself.
That's right.
And if all the assumptions that were in the original design are fulfilled by a rising economy and a rising stock market, the thing is self-funding. That was the original concept. It wasn't designed to be a disaster. It became a disaster because the markets, the return, the interest rates, all those factors wouldn't support the original design.
Yeah. Now, clearly, the markets play a factor in why it's bumped up to 8 million. The other factor that I've understood is that people are living longer than the actuaries were assuming 10, 15
And yet our
years
burial
ago.
fees are going up.
Yeah,
So, go figure.
yeah, exactly. They're just not employees,
There was also a period around, I don't know if it was 07 or 08, that the funds were taken over by the state.
It was. In Middlesex?
Yeah,
Oh,
they
okay.
took the assets, and maybe that 07 to 08 was different
Truing
from
it
the
up.
state.
Yeah, yeah.
But I don't know if the assets are back under Middlesex control or not. But you could have, I think it's Tom Gibbons. I'm sure he would come in and.
Give us that might be an interesting evening.
Not interesting, but yeah, it would be good to hear from him.
like, this is interesting. Wake up, Mike.
I want to have an unfunded OPEB car wash.
Yeah, there you go, yeah, that's good. All right, any other thoughts? You're okay with this, Mary? So,
Yeah,
the
I have a
thought,
question, actually.
Oh, good.
I guess for Paul. You spoke about the change at the state level of negotiations with the union where they're postponing retirement age in order to get a larger benefit when they actually do retire. You said that, correct? More or less. So my question is, at the time people are reaching that age, that's the time when they're presumably making the most in salary as well. And so is there an incentive there for people to hang on for an extra in years that the town, is funding at a very high rate of salary? What's the pay,
They were changing that from 3 years to 5 years. Right now it's 3 years, the top 3 years. I think they were going to go to 5 years. But they've had economists and statisticians run all the numbers and determined that if this is done, yes, there will be benefits more, but the total package is less for the state and for every city and town, because this would be a state law that just takes effect across the board.
okay, so they don't think that the increased payout for an extra 2 or 3 years of, say for a teacher $100,000, that will get made up somehow?
It will be a net savings, but it's not that the employee will get more money. They're mandating that spouses will be covered, a whole new class of people. It's an exciting concept for the unions, and the cost is significant. But by the changes that they're proposing to make, by deferring things, making longer periods of time, all the way throughout the system.
So there's no incentive for them to work to 68 instead of 65 and collect another $300,000 in salary? Is that correct or incorrect?
Well, I'm not on the committee that's doing this, so all this is secondhand, just getting it from sitting in meetings and listening to it. So, and I've read the bills, obviously, because there are parts that I've been lobbying to change. There are features to these bills that we want to make more favorable to particularly for municipalities. So I've been focusing on particular sections. I haven't been focusing on how that particular section works, because there are these people who come in who are experts and whose opinions both the unions and management trust, and they say, they have these models and these simulations, and if you change this, it has this effect, and over what years. Part of our concern is that we need relief faster, so that while there's going to be substantial savings, it's 10, 15 years out before the big savings kick in, and we want to move those savings up faster to give faster relief here. And that's a complicated, it's all driven by formula. It's to use an analogy that someone said, if you have a rocket that's going to outer space and you make a small little change after it leaves Earth's orbit, that's hundreds of thousands of miles out there. So here, if you make a little change in the law that has little effect on people now, it has profound effect 10, 15, 20 years out. And so this is all designed so that 10 or 20 years out, all these obligations will become much more manageable. And the part that I'm pushing on is to move that relief up sooner rather than later. That means a bigger impact immediately for a quicker payback for cities and towns. So all this is in flux. I mean, there are important interests at stake, and people who have vested rights that you're asking them to consent to changes. So it's a, but everybody understands if it's not fixed, it's broken, and
Right.
and it's gonna collapse. All the governments are gonna collapse with this. We'll end up being Detroit's, will be consumed by our,
Well, or we might be North Medfield or something. You know.
right. It's so bad that it has to be fixed. Everybody realizes it has to be fixed on all sides. And so the question is, everybody wants to fix it in a way that works for everybody. There's a lot of cooperation going on.
But we also have this immediate school increase of 10% a year too, which is a significant budget buster too. And I don't know what the answer to that one is either.
Right.
And there's not, I mean, we depend on the schools, I mean, on the state for school funding, but it's not predictable, and we seem to have a, champagne tastes in terms of some aspects of our schools.
Well, I said in town meetings in other towns where people say we need to increase our school budget in order to keep up with Dover Sherborn. Because Dover Sherborn
Leading the charge.
is going here, if we don't keep up with them, so they're asking for the same types of increases in order to keep up, because we're up there as one of the leaders.
Of course.
But it's not just in terms of how much we spend, it's also how we spend it. We do spend it well. Our education is superb. But there's this competition for teachers. And the theory is if other communities don't spend like Dover Sherborn, they're going to lose the top teachers to Dover Sherborn. And that's where the quality comes, is from quality teachers. So there is a competition for quality teachers.
We have an energized new superintendent and headmaster, and hopefully they've got some ideas on how you can do more with less. Because it's not,
Conversations I've had,
throwing
yeah.
money at it is not just
Right.
the answer.
Conversations I've had with the new superintendent indicate that that is the direction in which he would like to go.
Good. Well, I think very highly. I look forward to working with the superintendent. He's sharp. He gets it.
Yeah.
But what they
Serving our best
teach us
interests.
in budgeting 101 is if you have 60 kids in a class, you can have 6 teachers with a class size of 10. You can have 5 teachers with a class size of 12. You can have 4 teachers with a class size of 15. And you can have 3 teachers with the class size of 20. Communities make that choice.
Right.
But one of your most expensive items is your teachers. So what level do you want to fall? Well, obviously, if you're ready to spend for 6 teachers and have a class size of 10, you're going to have very close attention to your teacher, to your students, a lot of one-on-one. Your kids are going to get a superb education. At 20 kids per teacher, are the kids getting a bad education? No, it's still, I mean, there are school systems that have 25, 26, 28. But do the residents of Dover and the residents of Sherborn want to send their kids to a school where there's 27, 28 kids per class? No, they're going to want quality education. Because that's one of the big attractions for the town of Sherborn. The policy decision of whether you go the 6 route or the 3 route, 3 teachers or 6 teachers, it's doubling or having the number of teachers. That's between the school committee, advisory, and the voters at the end of the day.
All right. Do you gents have any objections? Do you think it would be worthwhile to have this up on the town website
Sure.
as a resource available to the voters and residents?
I noticed there's a couple of slides in there that didn't make it into our package. Maybe we can get those slides too for our own purposes.
Okay, great.
It should have just been this one, but
Yeah,
I'll
it
go
should
back
be
and-
just,
No,
yeah,
it
we'll
is
just
this
make
one.
sure,
Yeah,
just
okay.
this one, I
I
think.
noticed it
But
didn't page
you know,
through
we'll
the same
put that
way.
up. It will remain a work in progress, but I think we go up with what we have. We may have some additional slides that we had kicked around that we might put in there to supplement it to the extent it makes some sense and as we get smarter. I think you guys did a great job and I really appreciate it. It stimulates some good conversation as well. So, good. Elliot, you had your hand up, I think?
No, no.
You're good? Just stretching?
Yeah,
All right.
what do you think about, we've spent, and I would say invested the most in our schools of anything we have, and to the extent there's excess in any given year or opportunity in any given year, we have a really good asset that others might like to take advantage of. I don't know if you can tuition people in, or you can make your facilities available to others when they're not needed for our purposes,
Right.
but we've put a lot into those schools.
Right.
If you tuition people in, you don't have a choice, just so you know.
And by that you
If
mean,
you open your school to school choice, then you take what you get.
And the
So-
concern is if we did that, we'd be overwhelmed.
No, I mean, you can specify the number,
I see.
but you don't specify the individuals.
so you could get out-of-district IEP students, not that there's anything wrong with that, but that's what
Yeah, I
you
mean,
get
if we're
for the
looking
cost
at
versus what
costs,
you
we're
charge.
looking at revenue. I mean, that may be,
Well,
But the point is that you might, the school committees have historically wrestled with that question and
so
concluded.
you're saying it may
no.
be something that costs more than the
That's
revenue
right.
agreement,
If you
right?
get a $200,000 a year IEP'd student
Right.
and the fees are 15 grand, it's not a great
Right, so the
decision.
system is set up to prevent you from doing smart things.
It may be,
Yeah.
that's right.
possibly.
Right. But there are other ways to look at it, online education certainly is an avenue for reducing the student-teacher ratios perhaps, or increasing the student-teacher ratios rather. But still doing more with less and being effective. But that's a third rail of discussions with the teachers' unions and so forth, so.
There's a little bit of that going on now, tech collaborative,
Yeah,
if there's some of that going on.
so we have to, if I go back to one of these slides, at the bottom, it says, pursue regional solutions, grants, and more privatizing. Basically it's saying, always look at, are there opportunities to do more with less, or do it a better way that is more efficient and effective? And, regionalizing, privatizing, or outsourcing, or other ways certainly makes some sense. So we can't not have those conversations. And the town's done that pretty well in the past, has explored opportunities. Department heads are constantly exploring opportunities. And where they can make something happen, we do. But we can always keep working at it. All right, so I'm going to come back from the cheap seats. You guys look great from over here, I got to tell you.
It's working out a lot better, we got more elbow room.
Yeah. Maybe you like it when I'm not up there. Now I understand. All right, well, the next part of the agenda, I think, is just in anticipation of the advisory meeting, and I don't want to spend a lot of time at that, but I know that Diane had copied out, left you copies of the, we had a warrant guidance letter that we collectively did with advisory, and it has some dates. So we'll need to be thinking about that and discussing that with you guys next week, so we want to
Yeah, we want to get
think
the
about
dates.
that. We need to think about, Paul's going to make a motion at that meeting and think about how we respond to that. We need to think about the financial information that we've been presented tonight. We need to think about the degree to which we, if you think about the initiatives, when you weren't on the board, Mike, we had the Article 23 and we had a bunch of other initiatives, Paul, where part of it was putting more and more of the budget management into the hands of the TA. And the question is, to what degree we as a board want to continue to push that, or do we want to defer to this town governance committee to come back to the town and so forth? Because there are areas where we can push David to be up front and out front with this process even more. And so I just would ask you to think about that as we then meet with these guys, whether we want to put some words in their guidance letter and so forth.
Just for a heads up, your presentation, excellent as it was, did not convince me that we should increase the town side through an override.
Right.
I understand the schools are growing, and one solution would be, well, gee, then just increase the town side with raising more taxes. I don't think our community would support a general operating override. They are going to look to us to be frugal, all those things that you listed as or Dave or both of you have listed as the steps that we've taken, I think we're going to continue to have to take those steps. We're still going to have to limit raises. We're still going to have to control capital projects. We're still going to have to, as you put it, underfund things. Because to the extent that that's a convincing case that we ought to get more tax revenue and solve all these problems, I am not there. I feel that we need to protect the 48% who are on fixed incomes. It is hard for many of our citizens. The recession's not over. So I'm going to persist with the notion that we should be doing those very things that you said weren't attractive alternatives. But they are the only alternatives that we have available to us. And we just can't tax our people more. That's where I'm coming from.
Well, I'll be anxious to see Mr. Jimo's perspective on things as all this process goes forward, because you bring a different viewpoint, you're seeing it fresh, and the questions you ask are great, so I'm looking forward to that, I can say that much. And it'll be interesting when we meet with you guys. So that's really all I wanted to do in this part of the agenda, to just put a heads up to get us thinking and being prepared to go into the meeting with you guys, mostly to be working and supportive of you is how I would like to hope we see it, as opposed to turf battles over control of whatever and so forth. And I think in talking to you, you've got some good thoughts on how to go about this year, which we'll learn more about next week. So that will be good.
Where does the data come from, Peter, well, now I'm loud, wow. For advisory and for us on this process?
The data comes from in terms of there's a budget model. It's the town's budget model. Ruth manages it. The inputs and so forth are the what-if scenarios. They may try it, but the town, has created the model. And in that model, it will accumulate in the budget cycle. Department heads will submit budget forms, and I think I heard Mary say that she's got some ideas about altering the form we've historically used. And so if you've seen, we have a budget book that, by department, and it has a multi-page form and has a form for payroll and all kinds of stuff, and that then gets rolled up. Ruth pulls all that together, and those numbers then lead into or are fed into this model. And the model was something I'll take credit for turning from a 12-page model into a 2-page model, so it's a lot easier to work with.
And we review that model comes to us every month, updated.
And I guess my question is, next week's meeting, will that be looking at that model, or is it just a process-focused meeting?
For the model for next week.
Okay. And I think it would be helpful to get that information ahead of time. One of the things that frustrated me today was I received this information, a lot of it this afternoon.
Understood.
I've asked for they don't work on Monday, so I've asked for it for first thing Tuesday morning, and we use it till Wednesday night. So that's plenty of time.
Yeah, I mean, that kind of makes my point, which is, I don't feel like on these budget things, we should be operating at the last minute. I feel like in order to understand these numbers, and particularly, I know Peter goes to sleep at night, he dreams about budget pages, but for me to look at these things, for me to look at these things, I
Quite my full head of hair, friend.
I don't want to do this on the run, and I feel like we need to be well served in terms of getting that information accurately and early.
Yeah, I'm 100% with you. We really need to push for that.
That's something we need to focus on.
It's a critical tool for this process, absolutely critical
I
tool.
mean, we have a projection spreadsheet on our website now, and maybe you've seen it, maybe you haven't, that pulls in, projected revenue from taxes and the new growth and that sort of thing, projections on what we'll pay for insurance, putting away N dollars into a budgeted reserve fund and so forth, and subtracting one group of things from another group of things, which gives us what we feel is the ultimate slice of the pie that's going to be left available to budget makers. And then we will look at that and say, your budget can go up this much. And we have a few tweaks to that as well that we're going to look at this year.
So
There's a difference.
next week, will we be spending time on that 3-year projection you had done and presented to the 2 school committees, the regional and the Pine Hill School Committee? Or will we go right to the latest model and use those assumptions and projections?
If we get the information in a timely manner, say on Tuesday, we will be able to update that
Okay.
spreadsheet such that it will be our best assessment as of.
Well, the only reason I say, if you think it's worthwhile for us to be at least briefly looking at that 3-year projection that you had presented to the school committees.
I think it's certainly worth looking at. I would say that there's almost no chance of that figure that you will see as the rest of the pie, that the budget can go up. There's virtually no chance that's going to get any larger.
Understood.
And I guess, another question is, the assumption is that all budget makers are gonna go up this year, or are there some departments where the answer is, no, it really needs to go down?
What we have done over the last couple of years in an attempt to, stay out of free cash and so forth and kind of get the whole process under control is to allot the same percentage to everyone. But one of the things we've talked with David about doing this year is to give him a nugget of money that is equal to, let's call it 1%, because that was I'll use that because it's non-predictive, but it was last year's number. And say to him, every department that you control will get 1%. And that gives you N dollars, but maybe you want to give a percent, you maybe want to give 1.5% to this department and 0.5% to another department. And if you can show that that's a good thing, then that's good for us, because we have an overall target for people to meet, but, do I know who needs more paper clips? I don't. And so he presumably does.
Yeah, I'm
And
sure.
That's a very simplistic,
Yeah. And I'm
explanation.
sure I'll see a lot more of the detail, but it does strike me that if we're tightening our belts, to start with an assumption that everybody gets to go up may not be the best way to
And-
start.
Well, it's important that you push this issue, because actually, under him is only 16% of the budget.
Understood. And
Remember,
there are
70%
other
of the
offices, I am.
schools, and then there were all these independent offices. So 16% is what he starts off with. Last year we were trying to expand it so he had the 30% that was the non-schools.
Mhm.
He could have some say in, but
There are only a few budgets where there is a difference in dollars, where the amount of dollars makes a difference. I mean, if
Understood.
somebody has
I get it.
$1,500 budget, well, if they get $15,000,
I get that, yeah.
it doesn't matter. But, the schools are the largest budget.
Right.
By having that lump sum, that's really the only way that I see that the selectmen can have some sort of thumbprint on the budgets.
Under your control.
Our control.
Our control,
Yeah.
right.
Yeah, is by having that lump sum so that you can do your own budget review, and I can even ask them for a 1% reduced budget and say, have them explain what that would mean, and bring all that information into you guys so you can make a decision on where you want to be with it.
Yeah, I'd certainly like to see what, a
Impact,
level
yeah.
budget or a reduced budget would look like, particularly at a time where we don't have a lot of inflation.
Yeah.
I know we're playing catch-up in some areas, so maybe there needs to be some growth, but
I think I talked to Mary that I was going to look for a reduced budget, a level funded budget, and a level service budget. and see what, have them explain at each level what the difference is.
And it also may be that you'd want to apply one to some groups and another to a different group, a different department.
Right, right.
I mean, some years, a department will have some requirement where they really need more than, you know, I'm always picking on poor Yvonne, but, you know, every N years, she has to have this, Patriot Properties, is it, or what?
The reassessment?
The reassessment, yeah. Where they have to come in, she's got to do that.
Right.
And that puts her over, well, you know, that puts her over for that year, but the next year, she doesn't need to do that, so.
It would be interesting, I'm sure when you figure this out, what percentage of the budget is state mandates like that?
Yeah, I don't know. I have no idea. Certainly.
But you also see that example in the police cruisers, for example.
Right.
One year there's a need for one, next year there's a need for two or whatever. Some years we've skipped it.
Right.
Two cruisers.
2 cruisers this year.
We'll see.
Yeah, that's, we need the car wash for that, maybe. All right, so I think that is all I had on preparation for next week, and I think what we're gonna do now is deal with going into executive session. You've done another one of these scripts for me, huh?
Yes, thanks, Diane.
All right, so we're going to discuss non-union personnel negotiations.
Just before we leave, there's one
Absolutely.
other idea that we tried to do last year. I want to pass on to Mary before she leaves,
Sorry.
which was to put into the budget some funding for stabilization or OPEB liabilities as a budget item.
It's in there, 100,000.
Good, because last year that was a big discussion about whether to include that or wait till we get later on. We want it like right up front.
Well, I think Peter said it was in from last year.
It wasn't.
It was in last year.
It
and
goes to
it's in this year.
stabilization, it doesn't go into the fund that was created.
Was that?
Oh, I'm sorry. What are you talking about putting in a trust, or are you talking
No, he
about?
talks
just the
stabilization.
I'm not talking about where it goes, I just want to be sure
Right.
that we didn't slide back to the
No.
old practice of not
No, we did not.
doing it. So
is-
at least we have 100,000
Yes,
that's
if you,
integrated into the model.
yeah, I would
Yeah.
point you again to the spreadsheet analysis that's on our website, and you'll see $100,000 there. We haven't actually, it may be listed as 125, and budgeted reserve may be listed as 100, but we have to talk about that, but in conversations we've had at prior meetings, I think we're going to stick with 60 for budgeted reserves. After we talked to Ruth, that seems to be about the right number, and we probably will not increase the OPEB stabilization to the 125. We'll probably keep it at 100.
To my knowledge, correct me, if it's not in that OPEB trust fund, if it's not
It's
placed in there,
available for other uses.
it's a reserve, it's available for other uses, and it's not going to change the numbers in the.
That's correct.
That is correct.
Absent going into the trust fund, we aren't reducing the liability. And so the liability goes up 600 grand every year is what we've seen for the town, just the town. And if we were funding it at the rate of 200 grand going into the trust fund, the liability would start to go down
Correct.
based on assumptions and earnings and all that.
So, I mean, that's something.
So that's a serious discussion
That's
still
a
to be
serious
had.
discussion, whether to start either to move
To fully
what is
fund it, go to
there
funding it, right.
into a trust, or to leave what's there and start making new contributions to a trust, or to put the trust off for another year or two.
There should be something
That's a
going into
conversation.
the trust, even if it's $25,000 increasing by 25 each year.
Yeah, I'd like to see us have
Something.
that discussion.
So
So
I
you can
think-
say, yes, there's stuff.
But this
we're
fiscal
funding it.
year, at least, is the first year that we've appropriated. We created a taxable expense line item.
That is, I
For
think, well, it
OPEBs.
was in there last year also.
That's not, for this current
Oh,
fiscal
this
year.
Current fiscal,
Right,
right,
and,
right,
and
yes.
you're, so that
So going
enables
forward, I'm
allowing
already
for it
thinking next year.
for fiscal
Yeah.
15.
I mean, you know, the car wash was a joke, but if you think about it, $100,000 is basically a car wash for every household in town. I mean, it's not, you're not asking for very much money. from a household if you're at that level.
It's just, it took quite a push to get that, because basically all the money's spent.
Understood.
already.
No, it's a big deal. It's a good start.
You
And
should
it
start
takes a
with
lot,
that.
it's real money, but it's,
But the ask usually
Yeah.
exceeds the availability, and so we're saying, well, in the ask, be sure, because shouldn't be an afterthought. This
No,
should be
this is in there.
a
Right.
commitment right up front that we're gonna do at least that. So at least you have a running chance of going and saying, increase that by
Well,
this amount or
In
that
in
amount.
fact, now that you're talking about that, I'm remembering that one of the warrant articles that we recommended no action on last year was the warrant article that actually funded that because we no longer needed it because it was built into the budget, so into the
That's right, we,
operating budget.
instead of taking it out of free cash, you
Cash.
put it in a stabilization,
That's
right?
correct. So-
But again, the real cost on an annual basis for the town, including our share of the region, is closer to $500,000, not 100,000.
Oh.
So
we-
that's
we
a
know.
half, that's
Yeah.
400,000 that we're kicking the can forward.
Yeah.
My kids and grandchildren are gonna be paying for it, assuming
If
they're
they
able
can
to
aff-
afford
if-
living here.
I was just gonna say,
Right.
assuming they can.
Otherwise, they're
afford
stuck
my
with
house.
Framingham's, can't be kicked out.
yeah, or wherever, yeah.
Or Situate, that's right, yeah, it's widespread, as Paul was saying earlier, everybody's got a problem.
Even if you move to Florida, you're
But
gonna.
I don't live in the other towns, I
Well,
live
there have
in
already been
Sherborn,
little towns that have
I'm
gone
sitting at
under.
this seat in Sherborn, we still need to have that conversation,
Yeah, I think it's a good conversation to have.
yeah, so, great, I look forward to next week, and
Great. We're
Thanks for
looking
coming,
to
looking forward to work with you.
Enthusiastic
Do we have to
attendees.
provide goodies or?
No.
Thanks very much.
Thank you.
Thanks.
Thank you for coming.
All right, so now we're gonna go into
I
executive
think
session.
Elliot may have
Oh,
a
Elliot,
quick
yes,
question.
sir.
Did you approve the warrant?
We did.
Yes, we did.
You did, okay.
Yes, thank you. No, we did it early on, and I appreciate it, because
Okay.
if we miss something like that, I'm counting on you to remind us.
Not
Yeah,
to be paid, you're not the federal government.
that's right.
Thanks, Elliot.
Thank you.
There's an idea, shut down the town government and save money.
Downtown government, there you go. Another revenue enhancement idea.
That is more.
But I don't know if
common.
I would vote for the furlough and pay to be paid for work not done.
If you
Oh,
shut
wait,
down
maybe I would.
July
you,
1,
I
a
would
couple
think.
of weeks.
For a couple weeks on July 1, that's your proposal?
Yeah. It's a great idea. All right, so we're gonna go into executive session. I'm gonna make a motion, but we're not gonna return to public session, okay?
Okay.
All right, so I move that the Board of Selectmen enter into executive session to conduct strategy for non-union personnel negotiations as it pertains to the Sherborn Police Department, Police Lieutenant contract, and the Chair so declares pursuant to General Laws, Chapter 38, Section 21A2, that discussing this in public session may have a detrimental effect on the town's strategy if conducted in public. The board will not return to open session. I need a second and a roll call vote.
Second.
All right, the motion is seconded by Mr. Jaimo. Having a second, we will now have a roll call vote. Mr. Durensis?
Aye.
Mr. Jaimo?
Aye.
And Mr. Caruso votes aye. Having passed by a vote of 3-0, the open session is now closed. Good night, and we are now in executive session. Thanks for paying attention.
All right, we're off.
Okay, gents.